Over the next couple of years, I want to turn $10,000 into $1 million. And in this video, I'm going to show you exactly how I plan to do it, what the strategy is, and what are the risks. But as usual, none of this is financial advice. I'm definitely not a financial advisor.
Knowledge.
Now you may be wondering, how does one turn $10,000 into $1 million? Through my time options trading, using trading bots, using crypto. There is an idea that I think is a really solid foundation to actually do this. Now, this is not an original idea of mine. This is a blend. Satoshi Stacker is one person who uses leveraged crypto trading bots and uses compounding to turn and stack money really quickly. Now, I don't watch his channel too much, but he was an originator of this idea, so I just want to give it a shout out to him. Now, with my time using Bitsgap, if you watch this channel, you like to know I use a trading bot called Bitsgap. You can hook up to your Coinbase account. And you can see over time, I have made decent position shares. Here's a BTC USD bot that ran for 4 months and it made 13%. And this was in a time period when Bitcoin was literally doing nothing, chopping sideways, up and down, up and down, up and down. And I made a 13% gain on this trading bot. So trading bots are a great way to make income, or a great way to make money on your positions when an asset is trending sideways. And I've been studying the Bitcoin price over the past little bit since the ETF launch, and something peculiar is really happening. I marked it out on the chart for you. We can see since the start of 2022, Bitcoin has had long consolidation periods compared to other normal runs. This one was 196 days, 71 days. The great chop of 2024 was 238 days. And recently, at the time of this recording, I'm recording close to all-time highs. Bitcoin has had a 156-day consolidation. This is with the Trump tariff stuff going on when I'm recording. Compared to previous Bitcoin bull cycles, you can see, of course, there's a chop, there's a bear market, but bull markets were a lot quicker. Run up, about 2 weeks of consolidation, the 7-day chart, run up, 2 weeks consolidation, run up, 2 weeks consolidation, and then there's this big downfall, but then similar again. You can see in 2017 as well, big thrusts, big booms, crazy price movement. And Bitcoin has not had that, and even during one of the most tumultuous times for the stock market in recent history, the Trump tariff, Bitcoin dropped comparable to the NASDAQ, a 31% drop, which is really not bad because compared to the COVID time with Bitcoin, Bitcoin had close to a 70% drop. 62. So we can see Bitcoin is a developing asset since the ETF came out. A lot less volatility, still 30% is a lot, but less volatility compared to 62% during the COVID crash. And when we examine gold, I know gold's a hot topic right now, but when we look at gold, in a similar time period when a gold ETF came out, GLD, in 2005, what do we notice? I marked these out, long periods of chop and upwards momentum. 293 days, chopping upwards. We had a long consolidation, 497 days, and then a consolidation of 558 days, and consolidation, similar to the current Bitcoin chart right now, how it is looking. And even despite this time period, this is about a 7-year time period almost, gold had a 344% increase. Despite all this chop, 72% of the times it's moving sideways, according to my math. Only few of the times it was actually moving forward, but you still got a 344% gain. So with this theory in mind, let's say Bitcoin's a more solid asset now. There's going to be less volatility, still 30, 40, 50% drawdowns, maybe not 70 anymore. There's going to be a lot more sideways volatility to capture profits from. And this is where the trading bots come in. If Bitcoin has a new type of price movement, maybe the boom and bust cycles are over. Maybe this is a new era for Bitcoin where it slowly marches upwards. Trading bots are going to be a great asset to compound to make money on. Now, I really like this idea from Satoshi Stacker. Let me pull it up here. If we have a Forex compounding calculator, and periods is each time you make a 5% gain, and we start with $10,000. Each time we make a 5% gain, we reinvest it into the portfolio, then it keeps compounding and compounding. So you can see we start with $10,000, make 500. Now we have 10,500. We make another 5%. Now it's $1,025 total, and now we have 11,025. And we keep doing this over and over again. Compound interest. Every time we make 5% gain, over 95 times we turn up with $1 million. Now we can see in my Bitsgap Trading Bot, over 4 months I did that twice, almost 3 times. I had a 13% gain in 4 months when Bitcoin was doing nothing, and this was with low leverage with nothing. So for me, this makes sense in my mind. If I can keep having a portfolio that slowly compounds, slowly in a volatile sideways market, even with small thrusts upwards. This makes sense. I can compound. I can keep growing portfolio in a sideways market, and eventually, hopefully, it hits $1 million. How long does this take? I don't know. But I think this is a feasible option, and I think Satoshi Stacker's mindset really makes sense regarding this, given the recent Bitcoin price history since 2023. Now, I'm in the US, and as of now, we can't use futures on many exchanges. I can't use futures on Bitsgap. So I am planning to start a futures trading bot on Femex. It's the only one available to me. I don't actually have a real opinion on Femex, guys. I don't know if I like it. It's been okay with my money. I've done some futures trading before. Hasn't lost my money yet. I'm not recommending them. I'm just saying this is the one that's honestly my only option right now in the US until there's some futures changes and regulations, which hopefully will come out soon, and then I can host my money somewhere else. But for now, you can see I can have a 5x trading bot and I can invest with 200 grids. So this means every time price has a very small increase on this grid, you can see it's within $160, it's going to buy and sell. And this is going to happen over and over and over again. And my profit per grid can be over 0.5% with Bitcoin's volatility, so this is a lot. So this is my plan. I want to start a Femex trading bot. I need an $8,000 account minimum, so I'm going to invest this $8,000, but I'm going to need some for margin because you can see my liquidation price is $87,000, which I think is reasonable. Bitcoin could fall back down there. Unlikely, but to be safe, I'm going to start with this initial investment and then put extra money for extra margin to lower my liquidation price. So over time, I hope to compound these bots, add more bots, and then slowly grow this account to a substantial amount. And then maybe I don't need as much leverage when I can take it slower. I can host my money somewhere else, and then it can slowly grow from there without risk of liquidation. But at the beginning, we're going to be more aggressive with liquidation. Now, I do have some rules. For this challenge, we are going to start with $10,000. Now, to help the account grow and like normal compound interest, I am going to allow myself $100 extra to invest every week. So this is $5,200 extra every year. Now, yes, this is not, I only have $10,000, but let's say this challenge goes on for 5 years. I'm only adding 25 grand extra to the account. So it's still going to take a lot of extra time. It's still going to be a lot of extra momentum. But I want these extra $100 so I can invest into the bots. But I want to be able to buy some Bitcoin. I want to be able to buy some assets for the times it goes down. I'm hoping when it goes down, you can buy and then actually have some to ride on the momentum upwards. And my idea with this is I just want to buy $1 for every 1% drop from all-time high. Maybe one day I'll increase it to 2, and I'll do this every Friday. Maybe I'll consider a master position as well. So if Bitcoin's 20% down from its all-time high, I'm going to buy $20 for the week. If it's 30% down, I'm going to buy $30. So on and so on. I'm going to do this every week with my $100. Now, I can use whatever strategy I deem fit. It's most likely going to be trading bots and buy and hold. And if there's an indicator I really like, I might take on a futures trading position as well. In the beginning, I'm going to pay taxes out of my personal cash account. If this actually ever takes off, if I don't get liquidated, if it starts becoming very large, look at that, nice. Then I'll start accounting for taxes and have to take it out of this account. So for now, I'm planning a 5x leverage bot. Maybe I'll lower to 4 or 3 in the future. I'm most likely going to utilize a 32% range to account for recent ranges. As recently, it's been around 33, 32. As of now, I'm going to be a little more aggressive starting this bot because I don't imagine it sinking all the way back down here, but maybe closer to 85 if we do get a pullback, as this breakout is not looking too hot at this moment. So am I starting at this worst time? Maybe so. Maybe I get liquidated. We're going to find out. And eventually, with adding more money to the account for the money I don't buy, I want to add it to lower my margin, so my liquidation price lowers to a 50% correction. And I think that will be sustainable. With gold, we did see a 34% during this time period. That was the lowest correction. Bitcoin's more volatile. We also got a lot more gains this past year. We've had, since the ETF, right now at the time of recording, we're 150% gain. So that's really good compared to gold's 344% gain in like 7 years. So I think Bitcoin's going to do a lot more. So we want a mix of a buy and hold strategy and then to account for the upcoming probably sideways markets that are going to go for a long time. Now, to also clarify why I'm comparing Bitcoin to gold. It's not really a fair comparison, but it's the only thing in recent history and a similar enough asset that went through a really boom super cycle over a long period of time and gives you some insane gains without really ridiculous drawdowns in the 7-year period. Gold is somewhat finite, right? It had a recent ETF release in 2005. I guess not recent, but back in the day. but you can see how that affected price moving forward when it became a lot easier to invest in compared to like buying gold, you know, at your local pawn shop or wherever people buy gold. Honestly, I don't even know, the internet commercials, right? So Bitcoin is similar now, where institutional people can buy it, everyone can buy it. I have it in my Roth IRA. People could buy it in their other financial portfolios. It makes it a lot easier to invest in. So I think that's why we're seeing similar price behavior to Bitcoin as the ETF came out. A lot of sideways, I think very similar to gold. So that's why I'm comparing these two. Now my assumption could be off. I acknowledge that. Maybe they're completely unrelated. Maybe Bitcoin won't have a crazy super cycle like this. Maybe it's still really boom and bust. We're gonna find out. And worst is I lose my 10 grand, which would be very sad. So that's the idea, guys. So if you wanna follow along, I'm gonna share this Google Sheet. I'm gonna have my portfolio balance, put the Femex, the money, probably one day with the Coinbase to host to Bitsgap. And for the amount of, I'm just gonna be buying IBIT in a separate brokerage to make tracking easy. And I can put the number of shares I buy. I plan to keep track of this compounding growth, and this will be kind of the milestone marker because it makes it really nice to see the starting balance, the ending balance, and then what stage I'm on. So if period 1, I need $10,500 to graduate to period 2. To period 9, I need $14,000. So over time this year, even with just adding the $100, hopefully I reach around period 10, hopefully with some Bitcoin growth. And then hopefully, once I reach 100 grand around this, I'm about halfway through the challenge because 5% compounding is very, very large. So that's the main idea of the challenge. And I'm also going to do a weekly journal to make notes of the portfolio balance, the date, and then things I added or did to the portfolio. Now there is a caveat. I'm going to be looking at on-chain data for Bitcoin, MVRV scores, SOPR scores, all that kind of stuff on the on-chain indicators. And if these get really overheated, if they're screaming top signals, I'm most likely going to sell bags, stop a lot of bots because then there's probably going to be a larger drawdown than I can maintain. And it might be a boring season until Bitcoin cools off again. So we'll see where price takes us. I don't know if we're going to really reach those super overheated levels again since it's a much bigger asset. Who knows? Maybe institutions just start buying and it just blows it to the moon. Maybe it's a slower grind like gold was, and it's a lot of sideways markets. I don't know. So I'm planning a scenario for both, to buy and use trading bots, and I can still add money every time. So if you want to join me in this challenge, please subscribe. I have a Bitsgap affiliate link down below. I actually like Bitsgap. I'm going to have a Femex affiliate link for you, those of you in the US. I don't really recommend them. I have no idea about them, but it's the only option to me for futures trading, so it's what I'm stuck with for now. So if you want to try to use it at your own risk, I'm just saying that. But this is the plan. So today we're going to get started. I'm going to do it on camera right now. I have my bot set up. I'm going to set up a long bot. I'm going to set my lower price range to 83,000, the upper price to 115 in case we do go up more. And I plan to have 200 grids. So every grid we make about 0.5+% per grid. And I'm going to start with the minimum investment amount around $8,775. And I'm going to use the rest to lower my estimated liquidation price. And here we go. There we go, guys. The bot has officially started and the challenge has started. See you soon.